Greetings. Thanks for taking the time to learn about this tool. It's called the DmRO indicator, and it's a summation of multiple tools and strategies that I've developed over a few years. It displays tracers and levels that assist with timing entries for swing and positional positions. This tool is best used in conjunction with other analysis, and there are nuances to it, and when paired with an understanding of correlation and patience, it's a pretty powerful tool to have not only for getting into trends right as they are turning, it also helps with knowing when it's best not to enter. First, let's break down the basic concepts of the indicator. Once I narrowed all of my strategies down to a handful of basic concepts that all work together, I had the idea to come up with an indicator that would display the signal with as little graphics as possible. I was able to narrow it down to three elements, first being the tracers. There's the positive tracer as well as the negative tracer. Then there's the levels. Positive levels 0 through 3, totaling 4 levels. The same is applied to the negative levels. Lastly are the weekly dividers displayed as red vertical lines. This indicator calculates a specific condition at a specific time, and it projects the start of the trading week on Tuesday and ends the following Monday. I found this to be the most consistent setting, and if price doesn't quite move to an anticipated level by Friday, it still has that following Monday to conclude. Now let's break down the theory and elements of the indicator. I named the indicator DmRO, which means Diametric Range Oscillator, with diametric meaning two things that are opposed, which for this case are the tracers being opposed to their opposite levels. For instance, the blue tracer fluctuating around or within the negative red levels, or the red negative tracer fluctuating around or within the positive blue levels. When tracers are near or within their opposing levels, there's a likely probability that price will revert to the opposite direction. So if the positive blue tracer is within the red, that would be a long signal. When red tracer is in blue levels, that's represented as a sell. In this section we will cover the nuances of the indicator. There are a couple layers of depth to it that traders should be mindful of, one being the distinction between a major bottom or top versus a continuation. The solid levels with the bottommost and topmost being the extremes are levels where major bottoms and tops are placed. These take a long time to set up, but when it happens with the DmRO indicator applied, it's pretty obvious. For instance, when the positive blue tracer gets below level 4 of the negative red tracer, that's an extreme stretching of price and a reversion should be expected. Even if price do intend on going lower, there's usually upside first. Very rarely it breaks and continues down. It's also good to keep in mind that there can be 2 or 3 consecutive weeks of the positive tracer pushing into the negative levels. This is rare and is usually due to major macroeconomic events, but when it happens, it's a much stronger signal and is actually my preferred way of entering. As far as using it for continuations, let's say if the bottom was put in and you missed it. Levels 0 and 1 are represented as the dotted lines. The real pullback will come back to those levels, and it usually takes months to do so. So it's best to not chase it and wait for the day price retrace back to and around the dotted levels, for it's extremely rare for price to hit the deeper levels before reverting. I will add that we are only comparing the tracers to the levels of its current week. We're not looking in the current tracers and comparing them to the previous week. We only pay attention within the weekly divider. Now let's cover volatility. Traders should always be mindful of how volatile the particular instrument is that they are trading. As I created the tool, I aimed to keep the settings consistent. For pairs that can move a good ways really fast, we should mentally give them a bit more wiggle room, but overall they still respect the confines pretty well. When it comes to low volatile pairs, don't expect those extremes to be hit, but when they do, which it's bound to happen, it'll be really obvious and you will know that you are at or around a turning point. Usually when low volatile pairs get to the extremes, it's often due to a major event. This brings me to my next point, flexibility. This indicator was primarily built for currency pairs, more specifically all major and minor pairs. It's not built for exotics, metals, nor other instruments that are really volatile, with the exceptions being S&P and WS30. It can work on ETFs, but there need to be adjustments made. I'm not able to test it on crypto, and I'm curious to how it would perform on that. I haven't spent the time to try it on everything, but it does enough for what I need it for. You, as well as the rest of the public, are free to try it on all available assets and adjust the settings to fit them. I believe that by making the tool public, it's the best way to get proper feedback across multiple instruments. Lastly, I will cover the limitations of the DmRO indicator. First, starting with the platform. This tool is only available for MetaTrader 5. I will expand on other platforms in the future, but as of the time of this recording, it's only on MT5. If you don't have or use MetaTrader, you can always download a demo version and use the indicator on that. I actually don't trade directly from MetaTrader, but instead place my trades via web and only use MT5 to view the indicator. When it comes to the time frame, the indicator is calculated on the 15-minute time frame. Sometimes there's a display issue, but it can be fixed by simply applying the 10-minute or 12-minute time frame. Even the 20-minute may work, but anything 30 minutes and over doesn't plot everything. If it ever glitches, just change the time frame and switch it back. That tends to clear it, but overall it very rarely has a glitch and is usually resolved quickly by switching time frames. But in the rare event of a few levels not plotting no matter what you do, it's best to just let it be because most of them aren't significant. Only the ones that align with where the turning points are more likely to occur are the ones traders should be paying attention to. To conclude this demonstration, I can't stress enough the importance of using your own analysis and only using this tool as an addition. It's not a red light, green light tool. It's only meant to aid a trader's decision making, and everything that I've gone over are all the basic rules that traders need to know after they deploy the tool on the chart. Both tracers and levels can be adjusted, and by scrolling back on the charts to see how they interact, you are essentially visually backtesting and seeing how it would have performed if you placed trades sticking to the rules. Thanks for taking the time to view this tool, and if you have any questions, feel free to reach out and I will get back with you with an answer.